boy, we have a lot to talk about. That news that sent Tesla's stock down over 3% in pre-market, that caused Tesla to have an almost 2% down day today. Well, after all, it's just another fudster piece from Reuters. I figured it was, but take a look at this. Quote, "The probe, which is not evidence of wrongdoing, could result in criminal charges, civil sanctions, or no action at all. Prosecutors are far from deciding how to proceed," one of the sources said, in part because they are sifting through voluminous documents Tesla provided in response to subpoenas. Reuters could not determine the specific statements prosecutors are reviewing as potentially illegal. I think it takes half a high school diploma to understand that this is not fraud from Tesla. I mean, quite literally, Tesla's FSD is called Tesla FSD Supervised, or FSD Supervised. It is literally in the name. And I would imagine this has been going on for a while now, and that's probably why Tesla changed FSD from FSD Beta to FSD Supervised. But that's really neither here or there. I just wanted to point that out because I know some people are really concerned about this, and I think it's a nothing burger. And I do think the stock will get over it probably tomorrow. Now, we do have some other things to discuss here in this video, like ARM, that is currently down about 7% in after hours following their earnings, causing Nvidia to fall a half of 1%. Tesla down a third of 1%, the NASDAQ down a tenth of 1%, S&P down about half of that amount. It is having a net drag on stocks, and this will likely have a drag on markets as well coming tomorrow. Despite this, though, you are seeing some very weird option activity in Tesla, really targeting over the $300 calls expiring in about 7 months from now. I will give you the latest scoop and what's going on. In my opinion, well, I think they're doomed. Who's doomed, you might ask? And the short answer is the people that are betting against Tesla. Because indeed, the bad news was kind of the headliners for Tesla today. Whereas in reality, you had some huge news that just flew like right under the surface. I've never seen an attack on Tesla this obvious before. Like, you're getting this huge news, and Reuters is coming out with this huge news that Tesla's being investigated, which has probably already been happening for weeks. It's like they had it in their toolbox, and they were just waiting for some really good news to come out like this to throw that out there. I want to be careful. It's probably a short and distort attack, meaning you kind of distort investors' perspective. You try to cover up something else that is good that is happening, so you can go out, short the stock, beat the stock down, and try to brush something under the rug. Because if you ask me, this news is huge, like massive, massive news for Tesla today, and nobody paid attention. China may support Tesla's local testing of robotaxi. We're talking about Tesla and robotaxi in China. That should have had a much bigger impact to Tesla's stock, obviously in a positive way, compared to this article from Reuters. And as you guys know, there is usually a reason why, or it sounds sinister, but ulterior motive to why companies do things or why people do things, right? It's usually to make money or prevent you from losing money. In the case of Tesla, with multi-year highs for short interest and really at a moment where the sentiment has started to shift, Tesla's business is a lot different now than it even was a month ago. In not, numbers wise, but psychologically. By the markets. We now have a way better understanding of what Tesla is doing, what they are going to do, and their long-term future. And it seems like to me, somebody is scared shitless, and they probably have ties to Reuters. I don't want to come off as too tinfoil hat-like in this video or too much of a conspiracy theorist, but I doubt I'm wrong, because mathematically on paper, if Tesla stock does go higher from here, in which the news today about robotaxis in China should have caused that, shorts are going to start losing a crap ton of money quickly. You have 3.85% short interest off free float, which doesn't sound like a lot, but that's a multi-year high for Tesla. You have about $19 billion currently in short positions. That is up from $15 billion 3 months ago. So short sellers are down almost $4 billion still from the lows that you were just at in the 130s. And at the highs when we were almost 200, short sellers were down almost $7 billion from that low that we hit around 138. Well, this could have been the news that really sent Tesla stock soaring today. This could have been a 10+% day for Tesla stock without this Reuters piece getting just thrown out there at coincidentally the perfect time. Also worth mentioning, 3 months ago, you only had 80.8 million shares sold short. Today you have 106.62 million. So there is just a massive short position on Tesla. And hey, maybe the shorts are getting lucky. But what I mean by that is there's really good news that would go against your short thesis, but Reuters just happened to release this article at the same time. Maybe the shorts got super lucky. That's a possibility. But it definitely is starting to feel like there's something bigger at play here. Because, I mean, what is going on? Like, honest question to you. Let me know down below in the comment section. What do you think happened today with Tesla stock? I feel like this is my first breakup, and I'm just having a hard time getting over it. Getting over the fact the markets, Tesla didn't react at all to a report of robotaxi testing coming in China soon. Like, China tends to do things quickly, much faster than the US or other areas in the world. It's like a bad breakup. I'm having a hard time comprehending that. In no universe, under any circumstances, would I have thought we would get real robotaxi news coming out of China and the markets would not pay attention. But hey, again, what do I know? Let me know what you think down below in the comment section. I will tell you though, this post from Tesla Bull really got me thinking. And this post was from today. These are the top call contracts. So the contracts that are saying the most orders, the most activity today. And they all kind of stick out because, I mean, of course. But this one in particular, this 320 call expiring January 17, 2025. Okay, from Wall Street's perspective, January of 2025 is not that far away. It's not that far away in the grand scope of things. Okay, it's like 7 months away. That's not a long time to be buying a $320 call on Tesla. Now, you had 11 different orders here today for this 320 call with premium paid of $1.63 million. That is a hedge fund institution. That is someone that went out there and bought a big trade there. Probably like $1.2+ million in the 320 call today, let alone any other day. That's a lot of very directional, short-term, bullish trading activity. And I guess just for contrast, the top puts contracts are the May 2024s, expiring this Friday and next week. All of them are pretty short-term duration, around the 170 to 175 put. But take a look at the premiums paid here. So these puts super close to the money, so less risky, with premiums of 2 million, 2.8 million. Yet this 320 call is like 100% out the money, and it has 1.6 million in premiums paid today. $4.2 1,000 contracts traded hands today at the 320 call, with open interest of 15,000. These are abnormal numbers. That is a big firm taking a big bet on something very short term. And to me, that suggests that they have confidence in something big coming in the near-term future for Tesla. Tesla's stock today did hold above its 50-day moving average into the close. That was a great sign after you did hit a low today of about $170 per share. Seeing a bounce at that level was great also. $170.15, almost right on the money. You've seen a bounce at 170. Fantastic. But you did get above your 50-day moving average, which is currently at $173.10 per share. Tesla stock in after hours is $174.13 per share. So you are above that. And you want to hold your 50-day moving average. Now, I don't know what's going to happen coming tomorrow. Tesla stock is down almost 0.5% in after hours as the markets are starting to slip a little bit more. But this was a pretty good sign. Now, that means this trend line probably turns into resistance again around 180, which I don't think it's going to be too hard to break above that. When the attack stops on Tesla. And yes, I do believe today was an attack on Tesla's stock. Tesla's RSI is at 51.3, so you're pretty neutral there, almost exactly neutral. The MACD line, the signal line is, let's see, positive 2.6. And the signal line is 0.61. So you're both positive there, and that's pretty good for the short term. You have started to curl over. MACD line is starting to come down. The signal line has not yet you were seeing some pretty good inflows. Even today, seeing pretty good inflows as well, but definitely starting to slow down a little bit. And really from the recent low, you're still up almost 26%. Just where Tesla is sitting at now. So you've definitely went through your after earnings consolidation period, and I would imagine any time now you could start to make your way back to the upside again. Now, ARM reported earnings today in after hours. ARM is currently down about 5% here in after hours. The conference call is getting underway right about now, and you are seeing a little bit of a pop. You were down at one point about 10%, so you have went up a little bit since then. Even though ARM is going up a little bit right now, Nvidia is still down 0.5%, and I think tomorrow is really a toss-up, whether the selling gets worse heading into the open at 9:30 in the morning tomorrow, or whether or not you can bounce back from this. It will depend on the conference call and what is said, among other things. So here's the situation with ARM. This article says ARM's annual revenue forecast fails to impress investors and shares tumble. It says, for the current fiscal first quarter, ARM forecasts revenue in a range between $875 million and $925 million, with a midpoint of $900 million, compared with an average analyst estimate of $857.5 million. So that was actually a little bit better than expected. But the UK chip designer also said it expects full year revenue between 3.8 to 4.1 billion, with a midpoint of 3.95 billion. That compares with a consensus estimate of 3.99 billion. So that's actually in the midpoint, a little bit lower than expected, let alone, the low side of 3.8 billion. ARM said, quote, "I wanted to make sure we set a target that ties to what we have high confidence in, to what we can deliver." Finance chief Jason Child told Reuters in an interview. I just can't stand Reuters anymore. I wish I could ban it off the computer. They're too much. The timing of some of the company's licensing deals, he added, can be hard to pin down, which is why the company issues a range for guidance. So really, in the grand scope of things, not bad at all. But the stock is priced for that. The stock is priced for really, really, really good earnings. Like, it's expensive. You're not getting ARM on any kind of discount. even when the stock is sitting at 106 like it is today. ARM is now down about 6.5% here in after hours, and I think this is another one of those situations where it could bounce a lot from here. It could fall a lot from here, depending on what is said. You also do have, you should keep in mind, SoftBank that owns 90+% of the company, and whenever they decide to sell, I thought they would have already sold a lot more by now. They probably did sell a chunk here, but whenever they do decide to sell a large quantity, well, that's obviously going to have a negative impact, and you can only speculate whether or not that could happen sooner or later. Now, this is pretty interesting as well. Figure you'd probably like to hear it. In a new interview, Lucid CEO Peter Rawlinson said EV manufacturers from China are, quote, many years behind Tesla. Rawlinson said the battery and the drivetrain technology as some of the examples where he sees Tesla having no competition from China. Uber's CEO went on CNBC today and said, quote, I would never underestimate Elon Musk and Tesla. They're clearly the leaders in EVs. And for any of the bulls out there, you're gonna love this one. The last time this happened, the S&P 500 rose about 30%. Oil has shown to be an accurate leading indicator for the 10-year Treasury yield. With oil declining and yields now rolling over, the stage is set for more upside for equities. And you can see the S&P here in blue mixed with this black line, which is oil. Oil falls and equities tend to go higher. Well, oil is falling, and it has been falling for the last 2 or 3 weeks now, and equities have started to bounce from where they were a couple of weeks ago. This could signal maybe more upside to go from here. And with oil falling, that could be a huge win for commodities, right? And for overall inflation. I think people really don't understand this, but oil being used in producing products is not the biggest source of oil-induced inflation. Oil-induced inflation, and why inflation tends to spike when oil spikes, is because no matter what it is, no matter if it's these vitamin C tablets or this Xbox controller that my daughter painted on, or this Rich Dad, Poor Dad, or this Elon book, doesn't matter what it is. It was transported using oil. When you're thinking about inflation, there's 3 things that affect inflation. There's number 1, the workforce, the economy. If people can buy things, that's one thing. Okay, you can charge prices, literally. If people lose their jobs, they can't buy anything. Then pricing really gets pressured. And that's why inflation tends to fall as the economy weakens. Because simply, if you can raise prices all you want, if people cannot physically buy the product, then it's pretty hard to get inflation in that environment. That's why the markets have been wanting this weaker economy. Not necessarily great for company earnings or for the markets, but it would be good news for inflation. So that's the first component. The second component is really wages, labor, and there's definitely been some upside pressure there. Along with a strong economy and a good labor market, there has been some labor inflation, that's for sure. Especially with the new bill that was just passed in California. I live in Michigan. I'm far away from there. Maybe you guys could chime in down below and, give me your thought. Is that a big deal? Is that going to really hurt labor, input labor prices for companies? Or do you think it's going to be marginal? Do you think it's not going to be that big of a deal? Because maybe people were already making like $18, $19 an hour anyways, and now the standard is $20. Or are people now making $25 at McDonald's? And do you think that's going to affect at least labor or wage inflation? So that's the second one. That's a direct input cost to companies. And the third one is commodity prices, okay? Because no matter what it is, no matter if you're literally getting plastic or cotton or whatever it is to make your product, that is another huge input cost for companies. But again, oil is part of commodities. It is an input cost because everything needs to be shipped. So Labor, commodities, the economy. That's what drives inflation. So the economy is weakening, whatever. It's weakening a little bit. Let's face the fact there. But now you're also seeing commodities rolling over. Wages can do whatever they like. But if commodities roll over and the economy weakens a little bit, that's a really good recipe for continued disinflation. And judging off of what you've seen in oil markets in 2024, you had oil that started to rise in December of 2023 that has risen from about $65 a barrel to a high of $83 a barrel. That peaked out on April 12th. So the last month, you've actually seen oil falling from $83 a barrel down to $76 a barrel. Today, oil had a really good day. Today, oil was up over 1%, and after hours up 11 basis points as well. Not a big deal. Disregard really what happened today. Oil has still fallen quite a bit in the month of April and to start May. If that trend continues and oil does fall further from here, then that really does support equities. That does support the continued disinflation narrative. And I do think that could be positive for Tesla stock as well. Now, keep in mind the markets, a lot of people are not that keen, I guess is a nice word to use, to what's actually going on out there. But you just watch what oil's doing, because if oil continues to fall, then inflation's probably going to come in light. And that's how you can position your portfolio. If you start to see another rise in oil, then maybe the disinflation story is, well, not going to pan out, at least for the month of April. We'll see what the inflation report comes in as. Also important to keep in mind that inflation, or CPI really, is taken with 3 readings a month. So the beginning, middle, and end of the month. We don't know exactly when they're taken, but 3 times a month. So in April, if you did see oil really just start to come down, right? From about April 5th, you did get a down move in oil. It spiked for one day, really closed this day negative anyways, and fell throughout the rest of the month. So April CPI should look pretty good. So I think the bigger question is, what does oil do for the month of May, in which you have definitely started to fall? Today, again, not great, but over the next couple of days, if you do continue to fall, well, that's a good sign. May might be off to a good start as far as inflation is concerned. And inflation and the Fed, those are going to be the biggest drivers of Tesla stock, minus any specific Tesla news that we get. But then again, Tesla's being attacked. So even when you do get really good news like we got today, it didn't do anything. But it is hard to attack the CPI report and the Fed. If the Fed and CPI goes in the right direction, there's not much Reuters can say about that. Now, coming tomorrow, we don't have much. We do have initial jobless claims expected to come in at around 211,000. I mean, if we do get a spike there, markets are going to react to that. But it's been low for a while. We haven't seen a spike. So keep that in mind. Now, coming tomorrow as well, you will get a couple bond auctions and 4-week, 8-week bond auction. But that won't be important. Your 30-year bond auction will be important. That comes out at 1 p.m. The last yield we had was 4.671%. If that comes in higher, then that's not going to be great. If that comes in lower, that's going to be good. And the yield comes in lower by more demand. So if there's more banks going out and participating in this auction, then you're going to get a lower yield. So watch out for that. 1 p.m. I expect the markets are going to move quite a bit. It's not too often you get these 30-year bond auctions. And also keep in mind, a 30-year bond is a relatively new instrument within the last 10-ish years. I stand corrected. 1977 they started. So in the grand scope of like the United States government, they're a relatively new thing. They were the 25-year bond previously. Now the department only issues these bonds in February, May, August, and November. So basically once a quarter. So this auction in May, we're not going to have the next one until August. So if that demand doesn't come in good, that's not going to be a great sign at all. So we'll see what happens. And then tomorrow at 2 p.m., we do have Fed Daily that will be speaking, and that's pretty much it. So let me know what you think about this information down below in the comment section. Hit the like button as well as subscribe to the channel if you have not done so already. If you guys do want to come trade with us live in real time, every time I do make trades, I send out alerts. Check out the link down below in the description of this video for that one. Let me know your thoughts. Again, ARM, NVIDIA, Tesla, the short attack that happened today. Let me know all of that down below in the comment section. But most importantly, enjoy the rest of your day, and I will see you in the next one.